Hello traders, welcome and welcome back to my channel. My name is Gonzo Immaculate and I hope you've had a good trading week. And by the way guys, I hope you know that it is in this uncertain times that people make the most out of the forex market. So learn to profit from the panic. And guys, in this video, I will talk about the three elements of price action that I think every forex trader should know and understand. Let's get into it. So essentially, price action is the core of financial trading. When you think of price action, it means movement of price of a given financial asset over time. This is literally when we say trading price action, we just mean following patterns and cycles of a given asset. So think of chart patterns, think of candlestick patterns, think of key levels and trend lines, uptrends and downtrends. Yeah, so when every time when you open your charts and you look at it at any given financial instrument, you realize that it goes through a cycle of up, consolidations, and then down, right? So it's important to understand the cycles and elements so that you can trade price action profitably. So number one, you have key levels. Key levels are areas that have shown through time and time again to significantly impact price movements, whether it causes entire price reversals or a temporary effect on price movements. When you think of key levels, think supply and demand, think support and resistance, think trend lines. These are levels that are very crucial and important when trading technical analysis. When trading price action, in doing a technical analysis. Yeah, knowing your key levels can be the difference between you being on the wrong side of the market and you being on the right side of the market. Also, understanding your key levels placement can be the difference between you buying when the market is actually selling or you selling when the market is actually just buying, right? Please know how to draw your key levels. Remember, supply and demand, support and resistance. These are areas, not a single price point. So use your um, rectangle thingy on TradingView, not a single line. Yeah, and then your key levels are drawn at the bodies of your candles, not at the wicks. Trend lines, you draw them at the outer wicks of your candles. The problem with drawing trend lines too close to to the bodies of your candles because you will most likely get premature entries or you'll most likely be a victim of market manipulations. Now, at number two, you have candlestick patterns. Think of dojis and evening star, the morning stars, the tweezers, all of them. We have a lot of candlestick patterns. You just need to identify what matters. The one thing you should know about candlestick pattern is that you can never trade them by themselves. Yeah, if you're gonna trade candlestick patterns, use them as confluence, not by themselves. I use candlestick patterns on the monthly only, simply because I find the closure of the previous candlestick monthly candle to be significant and effective to the coming month. Yeah, so if you're gonna use candlestick patterns in the lower time frames, use them as confluence, as a support to your strategy, not by themselves. And lastly, at number three, we have chart patterns. Now, when you think of chart patterns, think double tops, double bottoms, think of flags and wages and head and shoulders. Yeah, again, not all chart patterns matter. You just need to identify what matters for your trading strategy. Let me tell you guys, one thing about the forex market, the hardest thing about the forex market is there are a million things, but only a few matter. Yeah, and the hardest part is you finding what matters for you. Okay, so um, however, when it comes to chart patterns, you need to understand that a chart pattern by itself doesn't mean anything unless it's validated. Okay, so I'm sure you've seen chart patterns on the 1 hour, on the 4 hour, even on the daily, but they don't really hold, and price just tends to move through them because they were not validated. So you need to understand validation and invalidation of chart patterns. Yeah, and the other thing you need to know is that chart patterns of the higher time frames, the week, the month, are very significant and very effective. Every time you see a chart pattern on the higher time frames, please take note and remember validations first. Yeah, before you can trade the chart patterns, it has to be validated. And also use it as confidence, not by itself. Yeah. Now, guys, I'm sure you've noticed that I haven't mentioned indicators and volumes and strength meter indexes. This is because all these things lag behind price. They're just but product of price movements. Yeah. So if you're gonna use the other element of trading, the indicators and the others, please make sure to use them as confluence to price action. Okay, not by themselves. And I think that's it. As short as it has been, thank you so much for watching. Thank you so much for being here. And guys, I have one-on-one classes where I teach you to trade the way I trade as swing trader. If that is something for you, I'll leave my number in the description below and you can reach out. And I think that's it. Wishing you a very peaceful week. Until next time.